Hi, good week to all. This is Kelvin here again. Welcome to this week latest edition of our weekly technical outlook for the week of 28th of Feb to 4th of March. We'll be covering the latest medium-term trend bias and key levels to watch on the SPX 500, the NASDAQ 100, the Hong Kong 50, the Japan 225, and as well as the German 40 benchmark stock indices. So as we know that a couple of weeks back, it has been very volatile. Why coupled with this ongoing concern about central banks' monetary policy tightening that could have a potential negative impact on the major stock indices, coupled with a higher volatility that's been driven by heightened geopolitical risk that's out from this Ukraine and Russia tension that is still ongoing. So without further ado, let's take a look at the disclaimer slides first before we jump into the greater picture that I'd like to share with you. Okay, so before we start into the technical, to actually discuss the technical analysis or the charts of the various of the respective stock indices, let's take a look at the momentum analysis across the globe as we see last week. So one thing I want to highlight over here is pretty remarkable is the turnaround that was seen on the five major stock UDS indices, the SPX 500, the NASDAQ 100, the Dow Jones Industrial, and the Russell 2000. So what I could see is that at the start of last week, it was actually negative territory, especially the S&P 500 actually have a maximum drawdown of close to -5% on the onset that when Russia officially invaded Ukraine. But what remarkably we call it uh, occur was the very significant reversal that was actually seen in on Thursday, late Thursday, and on Friday, where it managed to actually wipe out this -5% gain and close in the green for last week on the SPX 500 at 0.82%. That the worst hit the NASDAQ 100, as you all know, that NASDAQ 100 was actually the higher beta index, where it consists of more growth sensitive component stocks, which is the technology stocks like Apple and Microsoft and Nvidia, and even Tesla. So that's have a significant higher weightage. Uh, Positive 1.28%, and the Dow Jones Industrial Average actually underperformed. That is considered by Raj to be more defensive in nature, as it actually has some components of it are in what you call it, the financial stocks. But however, yeah, even though they it underperformed, it managed to actually close almost unchanged for the week. And the small caps also outperformed at 1.57%. But I want to highlight over here is if you compare its weekly performance against the prior 4 week average from here, what we could see over here is that all of them has managed to actually inch up higher than its prior 4 week average. So indicate to us that the movement last week was pretty steep on a relative basis. Means, i.e., it has a very strong bullish reversal. We call it bullish reversal occurrence. So later I'll share. If you look at the chart, it was a very volatile week. It ended with a week of a bullish weekly hammer. And most importantly, is where it end. It actually occurred right at a long-term pivotal support after a breach below it on last Thursday, but it managed to actually close above it by Friday. So that is actually a very significant or interesting phenomenon in terms of this reversal that has really taken shape, which we do not know that we could argue that someone is trying to actually hold the indices to prevent it from falling much further because that's a key long-term pivotal support. Whatever it is, I do not know. I do not want to actually make any speculation on that. But most important over here is in terms of from a technical analysis perspective, these key levels managed to hold at the end of the week. And on the onset, given that we have key risk horizon at the moment, which is i.e. the Russia-Ukraine conflict or the tension, coupled with central banks' hawkish policy that is expected to remain status quo as we head into the rest of the month for the rest of for this year. So one thing on the highlight is the Hang Seng Index and the Hang Seng Tech Index. They actually underperformed last week. Why? Because two factors. The first factor was number one, there is actually rumored that the Chinese authorities may start to introduce more restriction or clampdown on China big tech related stocks. That means, i.e., a year long of what I call it clampdown on the private sector seems not to be have ended yet. there's a rumor ongoing that's saying that, so that's give a bit of negative sentiment that's being kickstart into the Hong Kong related stock indices. And on top of that, Hong Kong right now is also facing a very rampant increase in this COVID-19 infection cases, where very likely there will be more economic activity restriction that's being introduced by the authority to actually slow down this rate of infection. So that could actually hamper economic growth going forward in Hong Kong, which actually also has a double whammy in terms of market sentiment wide. So that kind of explain why it's weak showing last week relatively to the rest of the world. So yeah, it's quite pretty much drastic. So later I'll share with you on the Hang Seng Index. It's actually yeah, even though it's quite bad, last week it managed to close exactly at the 23,000 key long-term pivotal support. So later I'll share with you on the chart. Negative 6.1% for the Hang Seng. The Hang Seng Tech Index, where actually consists of the China big tech stocks, down at negative 6.7%. One of the reason I explained much earlier is due to this ongoing rumor that there may be more stringent clampdown that is going to be imposed by China big tech stocks after Meituan, which is one of the top food delivery platform in China, was actually told to actually reduce platform fee that is being charged to restaurants, okay, to actually elevate the current SME, small medium enterprises business in China, to help them elevate their economic cost of doing business. So Nikkei 225 down negative 2.38% as well. And definitely for Europe itself was actually one of the weaker performers as well, given its close proximity with Ukraine and Russia, and more importantly, certain part of Europe, or most different part of Europe, rely on their energy supply from Russia, which right now has been slapped with more and more sanctions. So that could actually see a bit of higher cost of energy prices, which could actually hurt European economic growth going forward. So that could actually explain its current underperformance versus the rest of the world. But I want to highlight over here later is the US. The US actually outperformed again. All right. So given the climate of this ongoing climate of heightened geopolitical risk. So now one thing I want to highlight is this particular chart is I compare. Okay, so this is 4240. So it was actually breached on a daily basis, intraday daily basis, but managed to actually close above it on a weekly basis as well as from the daily basis on Thursday and on Friday. So 4240 was indeed a key long-term pivotal support that the market actually managed to hold, or someone actually, those who believe in conspiracy theory, someone actually managed to make that level hold, okay, in a way, make that level hold, okay. Why? Because this level, as we explained earlier, if this level has a weekly close below it, we could start to kickstart a multi-month major corrective decline that could take us down to negative 30 to negative 40% on the SPX 500. And what's interesting over here is that the uh, inverse relationship between the SPX 500 and the VIX. So you can see the VIX as well managed to pierce above a key resistance level at 32, but at the end of the day on Thursday it closed back below it, and on Friday it reintegrate back below this descending trendline resistance and this 32 key resistance level on the VIX. So indicating to us that there's a bit of fear capitulation on the market, or on the market itself, that could actually see further potential recovery, or this low, last Thursday low, could be another point of a potential bullish reversal on the SPX. But however, it got to clear certain intermediate resistance level to actually increase these odds of a medium-term bullish reversal for the SPX 500. So now let's immediately go down, dive deeper to the technical chart that I want to highlight for you. Okay, so let's start with the weekly chart first. We do a top-down analysis, because since it's rather volatile in the last week, so it's good to actually take a step back and look at the longer term time frame. It give us a clearer, bigger technical picture on the chart. So what we could see over here is that uh, this 4 to 40, without doubt, is the key long-term pivotal support. And what you see happened last week is that this long tail, which is actually a bullish reversal hammer candlestick formation, it happened on last week. That means on Thursday and Friday, prices managed to actually recover from its initial negative 5% drawdown. And this bullish hammer candlestick occurred the second time on the test of this 4 to 40 key long-term pivotal support level. The first time was on the 20 uh 24th of January. Okay, 24th of January week over here. So what we could see, right, all in all, this level is pretty pivotal, and price action actually reacted positively the second time, which is last week, after a test or a intraday breach below it at 42.40, but managed to have a close above it. So what we could see over here is that in terms of the Elliott wave, it's actually undergoing this long-term circular Roman wave 5. So this is the risk level or risk zone at 49.90, maximum 51.70 slash 5,400 level. So what we could see is that upon hitting this level, it could actually end this 13-year of long-term bullish circular trend that has been in place since the great financial crisis low, which is March 2009 low. So thereafter, right, where we may start to see the shape of this 30% corrective decline towards 37.20, a break below, take us down towards 32.50. But all in all, right, in from a medium term to short term perspective, right now we are still we can't say that this is the start of the long-term major or the multi-month potential multi-month major corrective decline yet, because from a price action perspective last week, this bullish hammer right at 42.40, and as well as from the Elliott wave and fractal analysis perspective, we may still start to see the last rally of hope and irrationality. That means over here there's no fundamental backing, it's just based on hope and irrationality to complete this last portion of this 13 year of long-term bullish cyclical uptrend. Okay, so in the medium term or the multi-work perspective, we could still see a potential up move at this juncture. So for this week, right, we will still maintain that bullish bias. Okay, so this is the daily chart itself. So on the daily chart, on the highlight is the RSI. The RSI will start to show improvement as well. So what we could see over here is that price action start to shape lower low, okay, lower low, but RSI during the same corresponding period is now shaping higher low and right at the oversold region level. So what it means that this medium-term downside momentum that was seen in the last 3 to 4 weeks has really started to lose its initial, where price action could be ripe to actually shape this potential bullish reversal. So maximum, right, at this point in time, we're looking at 49, 45.90. This former swing high area of 10 of February and 2nd of February, where it actually failed twice to break above it. So definitely got to shape a break above 45.90 before we will start to see potential new all-time high again. But nevertheless, in terms of a risk rewards perspective for a very short-term basis for this week, it could actually allow us to actually look for this potential tactical rebound play. So all in all, right, 4240 will be my key long-term pivotal support. So this will be the support that I have that I set for this week. So keep it a bit tighter. So definitely we have a short-term trigger level, which is 44.70, which is this descending trend line resistance that I draw from the current all-time high at 4th of January. A break above it could take us up towards 45.90. But however, if we start to see a daily close below 42.40, this is where we may start to see another intraday break again to actually retest a last week low at 41.07. And a break below it could take us much lower to this one-time Fibo expansion level, taken from the high of 4th of Jan, project it to the low of 25th of Jan, and project it to the swing high of 3rd of Jan, the one-time Fibo projection at 4,300 slash 4,035 slash 4,000 level. Okay, so this 4,035 level is actually this swing low of 13th of May as well. So we may start to see a kind of a intraday drawdown for the S&P 500 again. But as long as it did not have this weekly close below 4240, we got to actually respect this 4240 level. We cannot validate a major corrective down move yet unless we have a weekly close below 4240. Okay, so for now we are still looking for a potential bullish bias, at least to play a tactical rebound at this point in time, given we start to see encouraging we call it a positive technical elements from a long-term perspective, and as well as from a medium-term perspective, and as well from a shorter-term perspective. You look at the RSI start to break above this former descending trendline resistance, where all these elements are starts to get more positive that actually advocate for this potential tactical rebound play for the SPX 500. So nevertheless, given that SPX 500 has a direct correlation with the NASDAQ 100, So very similar price action, we start to see the NASDAQ 100 as well. But NASDAQ 100 has a higher volatility, so we're going to adjust the pivotal support level for this week. All right. So before I quickly jump into the strategy that for this week, means the level to watch for this week is same thing. I look at the long term level on the NASDAQ 100. Yes, 13,900 was actually the long term pivotal support. Tested again twice so far this year, one on the 24th of Jan and as well as last week. A very high volatile movement last week. We started to see this long tail candlestick formation, breach below it during the day during on Wednesday, and after the later part of Thursday and Friday, it managed to have a weekly close right above this 13,900 long-term pivotal support level. So this is indeed a level or a make or break level that allow us to actually say that there could be a last round of hope or a rally, a last round of up move that does not have any strong fundamental backing to actually complete this we call it a long-term circular wave 5 to end that 13-year of long-term bullish trend for the NASDAQ 100 as well. So risk level will be at 16,900. Maximum will be at 17,590 slash 18,150 on the NASDAQ 100. And thereafter, we may start to shape that dreaded multi-month corrective down move of 30% to 40% towards 12,050 and 10,960. Okay, in the first step. Now, if you look at from a daily basis over here, we have a bunch of intermediate resistance at 15,160, then at 15,540. So definitely this level got to clear, which is so the 200-day moving average for 15,160, as well as the swing high area of 2nd of Feb and 10th of February. So this level got to this bunch of this intermediate resistance zone on the medium term got to clear above. There before we start to see more we call it upside potential upside to complete this final up move of hope and irrationality for the NASDAQ 100. And one thing interesting as well on the highlight is the NASDAQ 100 also shaped that bullish divergence that was actually seen on the RSI. Very similar observation also that was seen that I actually highlighted earlier on the SPX 500. So with this bullish divergence that being seen on the daily RSI, it means that the 3 to 4 weeks of downside movement, its downside momentum has already started to lose strength, which we could actually be pretty much encouraging to actually look out for this potential tactical rebound for this week. So for this week's strategy, right, given that NASDAQ 100 is more highly volatile, I do not want to keep the 13,000. Okay, 13,900 was the key long-term pivotal support. I will use the last week's swing low at 12,970 as my pivotal support for this week. So as long as this level holds a break above 14,380, which is this descending trendline resistance that I draw from the lower high of 4th of Jan connected to the high of 10th of Jan. A breakout above this level could take us up potentially to 15,160 slash 15,540, which is the intermediate resistance zone that I highlighted on the daily chart. So if we start to see a daily close below 12,970, then we could actually take us much lower towards the one-time Fibo projection on the downside from the all-time high of 22nd of November, project it to the swing low of 24th of Jan, take it up from the high of 2nd of February. This 2nd of February, this gives us one-time Fibo projection at 12,410 slash 12,210, which is also this congestion zone here. Okay, seen on the daily chart, which is also the swing low of 5th of March at 12,210. So as long as this level holds, it didn't break below 12,970, give it a bit of excess. So this is considered as this part here is the excess that is below the 13,900 long-term pivotal support. Given that NASDAQ 100 is a higher beta index compared to the SPX 500, I don't want to tie it to 13,900 for this week. So give it a bit of breathing space. 12,970 is my pivotal support for this week. As long as this level holds, no daily close below it, at a break above 14,380, may take us up higher towards this intermediate resistance zone at 15,160 or slash 15,540, which is the medium term resistance zone. All right. Now, this one will be the next will be the Hong Kong 50, which is we call it Hong Kong 50 on platform, and the index is definitely the Hang Seng index. So on the share over is last week it has a very drastic decline, as you could see over here. Okay, so this discount over actually tested right this long-term pivotal support at 23,000. So what is 23,000? It's the swing low of 20th of September to 2020. Okay, let me expand the font size. Okay, so swing low of September 2020, and as well as this long-term ascending trend line support level that is drawn from the Great Financial Crisis low of October 2008. So last week it has a breach below this level, printed a low of 22,467. But nevertheless, as it come towards the end of the week, it managed to have a weekly close right at the 23,000 level. So it closed at 23,035. So give or take, right? We can't validate a further down move. Yes, today it gapped down again due to on last weekend, Hong Kong actually reported record cases of COVID-19 infection cases, and as well as there is actually unfortunately the hospital is now being filled up with we call it there's a big risk. I'll put it away. There's a big risk that hospitalization system in Hong Kong may not be able to contain this current dramatic rise in COVID-19 infection cases, which eventually the market is now expecting a more stringent lockdown in Hong Kong that could actually put a drag on economic activities in Hong Kong, which explain this current downside feedback loop or sentiment that is being seen in the Hong Kong 50 index. So yes, yeah, this week even though it gapped down over here, but the week is not over. Like I said, that 23,000 long-term pivotal support, we need to have a weekly close below 23,000 before I could validate a further down move towards 21,400, then thereafter potentially towards 18,050 in a longer term basis. So for this week, right, I will actually have a neutral stance because yeah, even though it has a gap down below 23,000, but I cannot validate a down move yet because this is a long term key support level. It got to have a weekly close below this level. Okay, before we can say that hey, any potential recovery is more or less game over. So if I were to look at the shorter term chart over here, so this is the 4 hour chart, you realize that it's actually below this resistance line. This 4 hour chart now has started to shape this lower low, okay, lower low. Now it start to shape higher low. So it indicate to us that the short-term down movement in terms of the downside momentum has really starts to ease off as well. So that being said, that I do not want to be so bearish at this point in time, and given that it's still below the 23,000 level, key long-term pivotal support. So now it's trading at 22,600. Okay, so I will remain neutral, very clearly between this former support now turns into a resistance. Tested one time, tested two times, and after that it break down below it. So this is definitely a key uh, intermediate resistance of a former range support, which is 23,380. So we turn neutral between these two range. That means kind of sideways between 23,380 and 22,400. So if we will start to see a 4 hour close above 23,380, then I could validate a push up back towards this swing high area of 17th of February and the swing high area of 20th of Jan this year, which is at 24,870 slash 25,200, which is also confluence with this descending trend line resistance that kept previous rebound since 11 August 2021. Okay, so we have a neutral stance for the Hong Kong 50 index. All right. So, but if we start to have a kind of a 4 hour close below 22,400, then we could kind of validate a further down move towards 22,200, then thereafter towards 21,650 slash 21,400 level. But nevertheless, we still got to have so this is the maximum downside that I could validate with the break of 22,400, but I cannot validate beyond 22,400. Why? Because 23,000 is a key long-term pivotal support. So unless 23,000 is decisively broken down on a weekly basis, then we could actually validate a further multi-month down move or a further slight potential decline or a more pronounced decline on the Hong Kong 50 index. Okay, so for now, prefer to have a neutrality stance. Now, the next index, Asia index, I'd like to highlight will be this Japan 225. So what's in store for this Japan 225 over here? So let's take a look at this Japan 225, okay? Okay, so for the Japan 225, look at the longer term chart. This is the weekly chart. So what we could see over here is this is all a very bearish formation. That is an impending double top after September 2021 failure to break above the February 2021 high, which is at this range top at 30,716. So the range support is at 26,880 slash 26,150. So what we could see over here is that last Friday it managed to close at 26,966, which is above this, yeah, 26,966, which is above the this range support level, which is the neckline of this neckline of this bearish double top. So all in all, right, what it means for us that we also couldn't validate a further potential down move yet on this Nikkei 225 or the Japan 225. And what's interesting over here is that the rebound actually occurred right at the pullback support of this former ascending channel resistance that was actually taken out on the 22nd of November, week of the 22nd of November, week of 2020. Now come back and retest again and manage to close back above the longer term range support level of this 26,080 slash 26,150, which is the double top neckline support level. But momentum is getting very weak because RSI already broken below a support, retest it, and now retreated for it, and now trying to inch downward again. Okay, so that being said, that right, on the daily chart, we could look at the daily chart from here. It's the RSI also pretty much kept by this corresponding descending resistance, now acting at the resistance at the 46% level. So we see a bunch of intermediate medium-term resistance at 26,900, then followed by 28,820, which is this descending trendline resistance that kept previous rebound in place since 14th of September 2021 high. So yes, we are at the range key long-term range support of 26,880 slash 150. But if you were looking for a potential tactical rebound maximum right now, we could actually look at its first step is 26,900, followed by 28,820. Okay, so what we will have for this week is that we have a bullish bias, but this bullish bias we do not want it to play too high up from here. So we are looking at the first step to actually test this intermediate resistance or the lower boundary of this medium term resistance zone at 26,900, using 25,560 as my pivotal support level. Give a bit of access below the long term range support of 26,150. All right, a bit of access. So this is the lower last Thursday low. So give a bit of breathing space. So as long as this level holds, we could potentially see a rebound towards 27,900. But however, if we start to have a break below or a daily close below 25,560, then we could potentially see much lower levels at the next support at 24,700 slash 24,180. Yeah, 24,180 mark. Okay, 180 mark over here. So what's 24,180? 24,180 is actually this former range resistance. Okay, former resistance now turns into a pullback support level. Okay, now to the key European index, which is the German DAX. So if you look at the German DAX, let's go to the weekly chart. Okay, so this weekly chart, this is our long-term pivotal support level, which is 13,600. So last week it managed to come down, test it, and shape this long tail candle again. Okay, but still below the previous range support, now turns into a resistance at 14,800 level. All right, so RSI now has really approached the oversold region at this point in time. So okay, so what we could see over here is we are coming very close to long-term pivotal support level. So in terms of downside wise, you got to have a weekly close below 13,600 before we could validate a further down move towards 11,330 from here. Okay, so all in all, right, what we could mean over here is that the German 30 index is coming very close to long-term pivotal support. But on the daily chart over here is the RSI is kind of a not so promising, as it's being kept by this descending trendline resistance level, and it's in the middle of nowhere right now on the daily RSI. So it's accept that price actually managed to bounce off from this 13,800 slash 13,600 long-term pivotal support level. So all in all, right, given that there is not enough technical elements to actually turn bullish at this point in time or to play a tactical rebound, I'd rather have a neutrality stance or a sideways stance between 13,600, which is a long-term pivotal support, and the former medium-term range support now turns into a resistance at 14,800. Okay, so what's this level? Okay, so this level, so this was the former range support that is managed to cap previous decline since 4th of May, broken down last week, 4th of May 2021, broken down now last week, now turns into a pullback resistance. Okay. Okay, so range support turns into a significant pullback resistance, which is at 14,800. So also it's pretty interesting. Why? Because On Wednesday, it attempt to actually stage a breakout above it, intraday break, but can't break above, and thereafter retreated pretty steeply on the onset of this Russian invasion into Ukraine. So pretty neutral right now, subway between 14,800 and 13,600, unless we start to see a breakout above 14,800, a 4-hour close above it, then it could take us up towards the next resistance zone at 15,500 slash 15,735. So if we have a weekly close below 13,600, this is where we could actually start to see a push down towards 12,840 slash 12,700 in the first step, which actually confluence with a couple of Fibo expansion level as well. Okay, so with that, I've come to the end of this weekly technical outlook for the major stock indices. So what we could see over here is very interestingly, the SPX 500 and the NASDAQ 100 managed to test. I mean, has a intraday break below key long-term pivotal support, which is at 4240 for the SPX. NASDAQ 100, 13,900, but managed to survive it last week and have a daily close above this level. So all in all, technical elements has also starts to show signs of a potential technical rebound. So for this week, we are still maintaining that technical rebound scenario for both the SPX 500 and the NASDAQ 100, and similar for the Nikkei 225, whereas we start to see elements that are not really that encouraging for us to play this technical rebound. Where we turn neutral for the German index, the German 40 index, as well as the Hong Kong 50 index. But both of them are still holding on to their long-term pivotal support level, especially Hong Kong 50. Yes, even though right now it breached below 23K, but it need to have a weekly close below 23K, 23,000 before we could actually validate a more pronounced substantial down move for that. Okay, so with that, to actually be nimble once you come and nimble, and as well as adhere to proper risk management techniques, as we do expect that volatility right now is still going to be rather high, and it's pretty driven by news flows, I would say binary news flows coming out from this Russia and Ukraine crisis. So with that, before we go, okay, before we go, let me share with you. I have a social media account, which is my CMC branded social media account at Kelvin SC Wong. So you can actually open a Twitter account. Follow me at Kelvin SC Wong, where actually you're able to keep yourself updated. This is my chart of the week, which I publish on Monday, and every Monday morning, 8:30 a.m., I will actually highlight to you all what are the key things, news flows and economic events that happen overnight, and what is its implication towards various broad-based asset classes. So do give me a follow to find out the mechanics of the in and outs of the current global financial market space. So with that, have a great week ahead, and I'll see you again in my next video.